Most people in their 20s struggle to save a few $1,000s, let alone invest it. And I get it, I was the exact same way. I didn't grow up with money, I didn't have some huge salary out of college, and honestly, when I started, I had very little clue what I was doing. But over the past 5 years, I have gone from $0 to having an investment portfolio of over $120,000 by age 26. And it wasn't luck that made this happen, it came down to me making a few smart choices early on, sticking with them, and staying very disciplined, as well as avoiding the traps that make most people broke. In this video, I'm going to show you how I went from literally zero invested to six figures, step by step, and what you can do to get there too. So quick question for you, how much money are you currently investing every month? Is it $50? Is it $70? Is it $25, $200, $1,000? I'm very curious. Comment down below, I'd love to hear. So jumping to the starting point of my investing journey, this basically happened right around COVID, which was March of 2020. That was like peak COVID. That's when everything was getting locked down. I was about to graduate college, and so the market had tanked a lot. From February to March of 2020, I think the S&P 500 dropped like 30 something percent. There were a ton of really big companies that were on a huge discount, but me being an idiot and also me being 21 at the time and just not being very smart, I was not investing for the long term. I was doing something called options trading, which I just feel like is such a loser's game in the long term. And so I was basically just gambling away my money with options when I could have been building wealth pretty early on there, but that's okay. That only happened for about a month or two. Then I started investing into high yield dividend stocks because I wanted the cash flow side of things. Now this is about May of 2020 as well as a little bit of June 2020. And even then, some of the stocks I was investing in were way too good to be true, where I'd buy them and be like, oh, I'm gonna get 15% a year of, cash flow, when in reality, it's like, no, the stock price is dropping. A lot of these companies, long story short, were just garbage and I shouldn't have been investing in them regardless. And so July of 2020 comes around and what I notice is, hey, the market's doing very well. There's a ton of really big companies out there that have had really good rebounds since the March lows, and I have barely made any money. Most of the money I've made is just basically from me depositing money. It's not from actual gains that I'm seeing. So I decided to completely switch my strategy and focus on something called dividend growth investing. All this means is that I would buy companies that pay dividends, which is basically a company's way of rewarding their shareholders. So they're basically saying, hey, thank you for holding our stock. We're going to pay you a little bit of cash and you can do whatever you want with that cash. You can use it to buy more of our stock. You could take out the cash and, go spend it on whatever you want. But I was mainly focused on companies that didn't necessarily pay very high dividend yields. So I'd invest $1,000. I'd maybe only get 2% of my investment in the form of a dividend, but they grew their dividends a lot. So, maybe I was making $100 a year, but then they'd grow their dividend by 10, 15, 20%. So with a lot of companies like this, although the starting yield is low, over time, your dividend income can grow a lot. And not only that, but the stock price itself can go up a lot too. It's not just your passive income that's growing. It would also be the stock price. And so dividend growth investing was the main strategy that I have had for pretty much the past 5 years. I just recently changed it, and I'll talk about that in a little bit. But when I was holding individual stocks, some of my biggest winners were companies like Microsoft, Costco, and JP Morgan. With Microsoft, I invested $5,244 into them. I made $143 in dividend income, and this past month I sold them for $9,453. And Microsoft was one of the first companies I started buying in 2020. It was mainly them, JP Morgan, and Visa. But when it comes to Costco, I invested $4,391. I made $151 in dividends, and I sold them for $6,734. And then finally with JP Morgan, I invested $3,012. I made $325 in dividend income, and I sold them for $6,205. So those were a couple of my biggest winners. It's not like I made 10x my money, but I got very consistent cash flow along the way, and I ended up selling them recently for a pretty large profit and securing some long-term capital gains there. Now, my biggest losers, I didn't actually lose money on them, but they did underperform the market or the S&P 500 quite a bit. So a few examples of those are Vici Properties, Realty Income, and Domino's Pizza. Again, it's not like I sold these companies at a loss. It's just that compared to just buying the market, I underperformed quite a bit on these three. And so for the longest time, I had been holding individual stocks, and I did eventually start to add in some ETFs, and an ETF is just a basket of stocks. So for example, the main ETF that I like is called VOO or VOO. All it is the S&P 500. It is the 500 largest companies in the United States. The other one that I really liked was called SCHD, which is a dividend growth ETF that is made by Schwab. So I liked both of these ETFs, and I started to add a lot of them to my portfolio, mainly VOO, but still also adding quite a bit of SCHD. So that is mainly my investing style. But one thing I've realized is that over time, I was underperforming the market by quite a bit. Like nothing is worse than seeing the S&P 500 go up 24% in a year and your portfolio is only going up 18% or 20%, because that 1% difference can make a huge impact over a long period of time, especially once your portfolio gets into the 500,000 range, the $1 million range. I mean, 1% is a very big big difference. And so I recently changed my entire portfolio. So now it is 70% VU, 20% SCHD, and 10% VUG, which is just a growth ETF that's mainly tech focused. The main reason I did this was to just focus more on ETFs and make my investing a lot more passive and just simplified. So here's a couple of screenshots. The first one right here is going to be my brokerage and my Roth IRA. This is the one that's just under $100,000. And then this remaining 24,000-ish number, whatever that is going to be my 401k. So that is the 120 something thousand dollar portfolio I'm currently sitting at. But one thing I want to talk about is the habits that made the difference here. Because at the end of the day, yes, the amount you invest, it matters a lot, but you also have to create a lot of really good habits to get there and get to that six-figure mark. And one of the first ones, and this is going to be a common theme on the channel here, is living below your means. When I first moved to a completely different state in March of 2022, I was driving a 2006 Camry, which I still drive, but it's fully paid off. I don't wear designer clothes. I'm not out here trying to flex on people. I really just don't give a shit. And I did actually have a little bit of extreme frugality thrown in there. I'm not saying to do this, but like for me, when I was saving up to buy my first house, this was from March of 2022 all the way until basically February of 2023. Like I said, I just moved across the entire country. So I was living in a one-bedroom apartment, you guys, and I'm not kidding. I literally only had a bed, a dresser, and then just my desk. That was it. I had no couch, no TV stand, no TV. My living room was blank because all I would do is just work my remote job, and then I would just play video games or watch shows or eat at my desk, and then I would just go to sleep. Like that was the level of extremeness that I got to. I'm not saying you have to go there, but that is the habit that did help because I didn't want to spend money on a couch. I wanted to save up, invest my money, and save up to buy my first house. The next thing that was really important was tracking my income and my expenses. I can even tell you right now, I'm pretty sure that apartment was like $950 a month. The water, I think, was like $20 or $30 a month. The electric wasn't much. I think it was like 60 or 70. It really wasn't that bad. And so I was investing and saving quite a bit of money at this time because I was trying to keep my expenses low. And again, during this time when I'm saving up to buy my first house, like I said, this was March of 2022 to February of 2023. I wasn't even making a ton of money. I was literally making, I think, $55K a year at that time. So not a lot of money regardless. I'm not saying that's bad, but it wasn't a lot. That's for sure. The next habit that made a big difference was avoiding debt traps. I did not get into the credit card game or take out loans or do anything dumb like that. I was just living within my means, staying frugal, and just trying to stack as much cash as I could so that I could buy that house. Now, the next thing I want to talk about is my portfolio value over time. And I wanted to really emphasize the point that it does not matter how much you invest starting out. It's about building the habit of investing your money. That is what's most important. For example, you can see here, January of 2021, I invested $200. You can see in November of 2021, I invested $430. And then February of 2022, $253. June of 2022, I invested $4. As you can see, for a lot of 2022, I wasn't investing crazy amounts of money. I mean, some of these are decent, $800 a month, $750, not bad at all. It's definitely good. But I was also saving up to buy a house at this time. But regardless, it does not matter how much you start out with. Like when I very first started investing when I was 21, and again, this was July of 2020, I think I was investing 25, 50, $75 here and there. It's not like I was investing thousands of dollars a month, but I knew that by building the habit of investing, this would really help me long term, because as I would grow my income, I would try to keep my expenses as flat as possible. And then with this extra income, I'd be able to invest even more. For example, in 2022, I invested $8,168. And then in 2023, that bumped up quite a bit. I invested $21,763. And then in 2024, that went up again, and I invested $28,000. And then finally, this year, I have invested $23,658. On average, I'm investing around $2,900 and something a month, which is a little bit under $36,000 a year. But as you can see, from 2021 until now, it's gone up a lot. And that's the main thing I've tried to focus on, is keeping my expenses flat or potentially reducing them and scaling my income. And one of the biggest things I want to encourage you about is the $10,000 increments will move quicker and quicker over time. And even if the market crashes, do not panic at all. Just keep buying. Like in 2022, like I said, I invested $8,000 something. You can see here that my portfolio, August 2021, was $18,000. Let's go literally 13 months later, September of 2022, it's $17,956. I had invested thousands of dollars over this time, and I really didn't have much to show for it, but I knew that long term, the market always goes up. It will always bounce back. You just have to invest consistently and buy the dip, or just buy it when the market's doing good. Just invest as much as possible. Just buy, because if you have a long time horizon, you should not be stressing market dips or crashes. And going off the point I was just talking about a second ago, you can see here that going from $10,000 to $20,000 took me a while. I mean, that's February of 2021 all the way until July of 2022. Like That could be very discouraging for somebody. But then you can see I go from 20,000 to 30,000 July of 2022 all the way until March of 2023. Okay, so that got a little bit shorter. And then we go from 30,000 to 40,000 in an even shorter time. And then before you know it, we're moving up $10,000 very casually here. We're going from like June of 2024, $69,000. 3 months later, 82,000. 2 months later, 92,000. And then we had our little dip that we saw earlier this year. I was kind of sitting around the 100K mark, and then boom, it pops off again. I go from 99 to 106 to 111 to 119 to 124. I mean, at the end of April of this year, I was literally right around $100,000. And just a couple of months later, I'm at 125,000. So it starts to move quicker and quicker over time. Now, again, this is assuming that the market is going up. If we were tanking over the past year, even if I deposited a lot, my portfolio would probably look pretty flat, or it'd probably go down, which is I have no problem with, because I know long-term it will bounce back. And that is what's most important, is having that mindset. The logic I would try to teach you here is that if you put money in and the market goes up, great, you've made money. Or you put money in and the market goes down. Okay, well, now you have a discount. Now you're buying something at a discounted price. What's incredible to me is the amount of people that will go buy a t-shirt or a watch or some luxury good because it drops 30%, but they won't invest in the S&P 500 that has a track record of going up over time. If the S&P 500 drops 30%, people panic. They shit their pants. They freak out. But if you can have the mindset that this is going to go up long term, I'm buying something that's very valuable on a discount, then you will get rewarded for that. And when you do get rewarded for it, when the market does bounce back, it will be a very nice bounce back. I'm telling you guys right now, whether the market's doing good or bad, do not stress this. It's something I just have to emphasize. At the end of the day, time in the market matters a lot more than timing the market. Somebody that's trying to buy it when the market's doing good and sell it when it's doing bad, just don't even worry about any of that. Just invest consistently and you'll be good. And one thing I want to emphasize here is patience is very key. Like, even if the market does good or bad, I had a full-on period where my portfolio pretty much sat flat for over 12 months straight, but I knew that when it would bounce back and I'd keep investing, that I would see the results of that, and I have. Another thing I want to point out here is trying to think big picture about this, because for example, I have, like I said, a little under $125,000, and this is as of the end of August. You want to think long term here. Like, this 120K, I could not invest another dollar, and this could double, triple, quadruple over the next 5, 10, 20 years. But I am going to invest more because I want it to grow even quicker. And let's say going from 0 to 100K takes you 5 years, like it did for me, then going from 100 to 200 will probably take you even less time. I mean, for crying out loud, it took me 5 years to go from 0 to 100, but then going from 100 to 125 has taken me less than a couple of months. And don't get me wrong, my deposits definitely affect this. I have been investing a lot more money, but that's the whole point, is you want to develop the habit, learn how to invest more money, and just invest super consistently into high quality ETFs, and you'll be good long term. And if you feel like it's too late to start investing, it is never too late to start investing. The best time to start investing is today, and the next best time is tomorrow. So always remember that. It's okay to start off with even $25, $50, $10, like whatever that amount is. Just try to start building the habit, because once you get started, and especially once you start seeing results, you might get hooked on it and want to start investing a lot more money and finding ways to either make more money on the side or reduce your expenses so that you can invest more. And again, you don't have to go to this extreme level of frugality like I have before, but it definitely helps. I'm not going to lie. It definitely helps if you do it for like a certain period of time, but don't do it long term. Still enjoy your life, still have that balance. So that is where the portfolio is at as of today. I'm going to be starting a series called Road to 200K, where I basically talk about all my investments every month, how my portfolio did, some different goals I have. Like, for example, one of them this year is to at least invest $40,000. I don't think we're going to hit the 40, because like I said, we're averaging around $3,000 a month, which is around $36K a year. But even if we got over $30,000, I'd be very happy with that. So I'm definitely going to start that series. I will be doing that on a monthly basis, but that is it from me. I hope you guys enjoyed the video. If you did, drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.